What is going on, guys? Today we're going to be talking about the single-handedly the largest market cap in the stock market, and that is Apple stock. So we are going to be going over what is going on with Apple. The stock has been going crazy along with the market, which is to be expected as it's kind of recovered and starting to recover back towards all-time highs or 52-week highs. So this is absolutely insane stuff that we're seeing here. And really the question is coming up, at least in my mind, is Apple overvalued for what is going on? I mean, the market, has been weak over the last 6 months, and there's still some weakness going forward. And the question is Apple overvalued? And that's what we're going to take a look at today. We're going to look at a lot of different charts. We're going to look specifically at PE ratio and everything that's going on there. And then we'll jump into some statistics about the iPhone sales, about revenue for Apple, everything that's going on behind the scenes as well. So I hope you enjoy the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Real quick, let's take a look at Apple's chart. So here alone today, they were up over 2%. In the last 5 days, up over 3%, 3.39%. In the last month, almost up 20%, which again is an absolutely insane move for a stock like Apple that has almost a $3 trillion market cap. So we are seeing a lot of kind of crazy things going on as the market has started to recover. The other thing that I want to note is, here on Google, they have a PE ratio of 28.44. Dividend yield, extremely low for Apple. I remember back in the day, you could get a dividend yield of around 1 to 1.25% for Apple, and now it's at 0.53, which is kind of crazy. And then the 52-week high, which is also important to note because we're getting very close to it. So we're currently at 172.10, and the 52-week high is 182.94. So again, only $10 off the 52-week high. So let's take a look quick at some of the statistics behind Apple. So it's very interesting to look again at Yahoo. I pointed out the Google PE ratio, and sometimes they vary a little bit. So here on Yahoo, they have a forward PE ratio of 26.67, which isn't terrible. Around 25 is kind of reasonable, but it's also a question of, what does Apple have going forward? What has Apple done in the past? And then can you relate those two to see where Apple should be valued, overall going forward. So right now, they're kind of valuing it middle of the ground. The market, being they, are kind of valuing it middle of the ground. If you look back in June, so when the market was kind of bottoming out, so we can look at the chart here back in June. So this is June 30th is kind of when this dated. When this PE ratio is dated. So the price was 136.72 around that mark, and the PE ratio, forward PE ratio, was around a 21.55, which again, in my opinion, is a decent value. I think around a 20 is kind of somewhat fair for Apple. But what we'll see here in a second is a chart of PE ratio overall over the long term for Apple and how it's kind of progressed and where it's been at very recently, which is very interesting to note going forward. Here we have a website called Macro Trends, and I love this website because you can basically go on here, look at a lot of data over a significant time period. And right now they have the P ratio, again, these vary across different sites. They have the P ratio of Apple at 27.8. So interesting there, again, to see a different number than both Google and Yahoo. But what we can see, and what's more important, is they're generally around the same number and have overall consensus of relatively similar PE ratios. And here we can look at data all the way back from 2010. So we can see that Apple, for the longest period, 2010 all the way through basically 2019, was trading below a 20 PE ratio. And then after 2020, we had a lot of things change. So a lot of money was pumped into the market, interest rates dropped through the floor, and basically Apple started commanding a lot higher valuation for the stock. And we've seen the stock kind of react as we've seen everything, the PE ratio, go up above 25, so 27 in here, and then it rose all the way up to around 35 PE ratio. And it's kind of started to creep back down. So this is very interesting to note. So we are well above, we're almost 10 points above where the PE ratio has sat for the longest period of time. 2010 all the way to 2020, it sat below 20. around 17, 18. So it's very interesting that there's that 10-point difference that's kind of elapsed over the last few years. And what is going to happen as interest rates rise and, as the market kind of resettles in? That is the question that we're kind of looking at here today, because what you would expect to happen is either Apple needs to increase its earnings significantly to make up for the difference in the price, the value of the stock, or the stock is going to pull back as earnings kind of stay level or level off or even drop a little bit. We could see a pullback in the stock to somewhere, that we've seen in the past, PE ratio wise. So it could pull back to 20, it could pull back to 15, somewhere in that range. It would just be very interesting to see Apple, at a 15 PE ratio again, like we saw back in 2018. Here we have something that I have used in the past. So we can use PE ratio to predict where the price could be heading in the future. Again, this is just an approximation. No one actually knows where the stock is going to go, but we can use the valuations, the PE ratios, to determine what price could be fair for Apple. So it's interesting, and I'm not going to say that a 15 PE ratio is fair for Apple, but with the market conditions that we're seeing, it could be reasonable for it to drop back down to where it was at, in 2018. And what we've seen in the data that we looked at, so we know that the stock price right now is around $172.10. The current PE ratio is 26.67. This is the one that I pulled off of Yahoo. And then the potential PE ratio I'm putting in there as 15. So that is kind of a low number. I mean, we saw from macro trends that it did get all the way down to 12, but also, anywhere from that 12 to 18 range. So we're kind of targeting the middle of that with 15. And the price target, if Apple were to drop to a 15 PE ratio, again, with no change in its earnings, just the price change from where the company is at right now, we would see the stock price go all the way down to $96.78. So that is absolutely insane. That would be almost a 45% drop in the stock. And that would actually be absolutely terrible for the market, because if we see this stock drop all the way down, that much, then the S&P 500 and a lot of other stocks are going to be falling just based off Apple's, valuation. So that is something that we don't want to see, but I don't think it's out of the realm of possibilities. Like I said, Apple right now is commanding a very high valuation, even though the market in turn is, going more risk off. Again, I don't like making a negative video. I personally do own Apple stock, and I don't think it's worth selling because, again, I think Apple is going to have a strong run. I think that they are going to have a lot of iPhone sales, in my opinion, but here it's just interesting to look at. So Apple generated $365 billion in revenue in 2021, with 52% of that coming from iPhone sales. Apple Services was the second largest division, responsible for 18% of its revenue. So this is just important to note. iPhone sales have actually been creeping down as their percentage of Apple's total revenue, which is overall a good thing, because it's good to see that they're kind of diversifying their business and they're not so reliant on iPhone sales, but it still is going to be a huge piece of their overall revenue. Here's the chart actually showing the division of their revenue. So we can see that here in blue, iPhone sales, where they've kind of creeped over the years. So that's actually naturally falling down over time, which is, again, overall a good thing, because it shows that Apple's kind of diversified their business so they aren't so reliant on iPhone sales. Because again, if something happens with phones, the phone market, Apple would absolutely get destroyed with that. So they have iPads in here, they have Mac, they have other hardware, and then they have their services business. So services business, that is going to be absolutely huge, especially over this next couple quarters, because the question mark that's kind of looming for me is, are they going to have strong sales of iPhone? It's based off the market and the market sentiment right now. It's kind of unlikely that they'll have as strong sales, especially when you compare it to 2020 and 2021, where the market and everything was going absolutely insane and people had a ton of money to spend. Now we're starting to see a lot more kind of conservation of capital by consumers. So it's going to be interesting to see over the next couple quarters as they release their new iPhones, where do their revenues come in and how does their split look? Because what I would expect is their services probably will continue continue to increase as people, you know, hang on to older iPhones a little bit longer and maybe need some service done to them to upgrade a screen that's cracked or whatever it may be. And then I would kind of, again, expect their iPhone sales to probably actually drop a little bit. And then also their total split by revenue to also fall for iPhone sales. Here we have a quick chart of the revenue over time. So we can see that they have just been, you know, absolutely crushing it over time, just keep going up and up and up over the years. What's important to note, you know, in 2021, you can see they had a very strong quarter here. So the first quarter seems to be the quarter that they're having the most, you know, the most benefit, a lot of positivity going on. So Q1 of 2020, they kind of leveled off, like you can see in here. And again, that's because of, you know, the other circumstances that were going on at that time. But 2021, this would have been at the end of 2020, basically that fiscal year. So once, you know, some of the stimulus checks and stuff had come out, you can see that they had a lot of positivity there from people spending a lot of that stimulus money on new iPhones. And then that kind of follows into 2022 Q1 earnings, which again is related to actually the quarter of or the end of 2021 year. So again, a lot of strength there. And we have this quarter. So there's 3 quarters, and then basically they have the quarter that is showing the iPhone sales and the strength from the iPhone sales. So really this quarter, the last earnings, nothing really crazy going on there. The next quarter we'll see a lot of, you know, leveling off. There won't be anything, I wouldn't expect anything too crazy, probably similar earnings to what we saw this last quarter. And then Q1, which will be released, you know, sometime early next year. I think it's normally in January. They will release the quarter that will actually have all their iPhone sales. So that will be the quarter that we'll actually be looking at, that will tell us a lot of information. That could be a make or break quarter for Apple, because what we could end up seeing, again, with all the money that was pumped into the market at this time, we could see them actually drop off a little bit. We could see something similar to kind of what we saw back here in 2018. So, you know, the revenue and everything was going up, a lot of positivity. And then we see here the very next year, a little fall off in their revenue. So I would prepare for that and kind of prepare for potentially the worst happening, where we see a little bit of a pullback in their revenue from their iPhone sales quarter, which again is their Q1 quarter. So again, I don't like making videos with a lot of negativity, but overall, we have a lot of analysts, and a lot of analysts are still saying buy on the stock. There's one down here saying that it's a sell, but we have an average price target of $181, which in my opinion, when we go back over here, I threw that in, that's only a 5% move up. I think there's a lot more potential over the next few quarters for Apple to actually move down. Again, with all this, you know, unknown of where they're going to come in for iPhone sales, they could have a lot of strength. They could kind of level off. I think it would be hard for them to, you know, crush numbers and actually beat. If they do, then, you know, they deserve everything that they've, you know, achieved so far, and probably deserve a little bit more on top of it. But in my opinion, there's a lot more downside in the stock right now than there is upside in the stock. So personally, I am not buying anymore. I do own quite a few shares of Apple, and I love the company. I love, you know, where they're headed in the long term. So I'm not selling out of my stock, but I am kind of the opinion that Apple is probably a little bit overvalued where it's sitting at right now. I think it's going to be hard for them to keep up with the growth, especially with high interest rates, everything that we kind of have going on in the market, consumer sentiment also. So that's just my opinion. Let me know your opinion in the comments down below. I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.